If the bankers panel would like to come up quickly, we're basically going to follow on from that. We've had the creme de la creme of the bank. We're now going to have the aircraft finance divisions coming up. Sit where you like. I don't think we've ever at this conference had 6 different financiers up here, which just goes to show that there is money available if anyone's looking for it for their clients. What we're going to do, Chris Miller from Shearwater, do you want to just give us a quick intro to Shearwater? Have you got a microphone with you?
Yeah.
Yes.
I think so. Yeah, Shearwater, we're essentially a private finance company. We provide private debt for asset-based solutions on business jets, and our clients are all over the globe.
And you're fundamentally asset finance?
Yeah, so when we say asset-based financing, our only collateral is the airplane itself. So we really don't pay any attention to credit, and we don't really ask our clients for any financial information. We base everything on the asset itself.
Great. Alex, do you want to do Global Jet Capital?
Yeah, hi guys. Alex here, Global Jet Capital. So for those who doesn't know me or Global Jet Capital, we are asset-based lending company. We provide specialized lending services for aircraft, lending and leasing services, solutions for private jets. So that's a little bit about us. Thanks.
Do you want to take us through HSBC?
So at HSBC Private Bank, we finance any asset classes, among them jets, and the other trophy assets that we finance are also yachts and art. But we do the full spectrum of asset-backed lending.
And you want a client relationship already, ideally?
No, we actually do bank. We obviously finance our existing clients, but we do also finance new-to-bank clients. So we do use these types of financing as well to attract new clients into the private bank.
But Stephane, you're very similar at JP Morgan to HSBC, aren't you?
Basically copycat.
Yeah. Mike, same with Citi?
More or less, similar business model.
And same with UBS?
So.
It's going to be a very short panel.
That's why you have 6 of us.
Singyew, did anything stand out to you from James's presentation? Was there anything on there that you felt stood out from his last piece?
Particularly the dollarization and the AI piece was particularly interesting.
And you agree with de-dollarization, there's no alternative?
I don't think I can form a view on my own over here.
And Melissa, you have to agree with everything he said.
Well, sort of, but I mean, just following on to Singyew's point about de-dollarization, we do, while the dollar does continue to be a dominant currency, we do see clients within the bank trying to diversify away from the dollar and going into other currencies like the euro, the yen, the Chinese yuan. So perhaps that will filter through to the to jet financing, where our valuations, the transactions are all dollar denominated. So one could argue that perhaps if we diversify away into other currencies, then perhaps that it would make things a bit more interesting, because there will be, we would need to pay more attention to currency hedging and how currency, your currency vis-a-vis all this basket of currencies.
Chris?
The server's busy.
So I actually typed the question and pick a winner, and I got DeepSeek answering like 3 pages, hoping that this balance overview helps clarify the current complex state of the US-China trade. So basically, there's no winner at the moment.
Yeah, and from the trade war between China and the US, I think it's not a zero-sum game. I don't think it's going to be black or white with one ultimate winner. And when you think about what the Trump administration has done with tariffs and disrupting the world in a very Trumpish way about tariffs. And I think it just kind of settled up, and it'll, over the course of time, the next several months, next couple quarters, I think the tariff issue will kind of settle out to be, to be a little bit more fair than it has been in the past.
Alex, did anything stand out from James's?
Yeah, so I just want to, give applause to James. Very good presentation. What I was, why I can resonate is, this deglobalization is actually not a bad thing. Creating a lot of new wealth in the process. Especially the supply chain where you need to supply each country's new manufacturing supply chains. Especially on the AI part, I would resonate that as well, because we do see that, from my own research, I myself do a little investment amongst, regular day jobs. So we do see a lot, of the AI supply chains, manufacturing. They are generating a lot of wealth from this AI, artificial intelligence autonomy. So I think that's a good thing. And then, which creates more wealth. More wealth was created, and then that translates to a bigger market for everyone. So.
Mike, any themes you resonated?
We're talking about, AI was a theme there. If you look at, say, pick your publication, some of the wealth lists. It's interesting looking at the demographics of what that looks like now. Look at the ages of some of the, say, top 100 of pick your publication. They're a lot younger, right? And something I've observed over the past, say, 10 or 15 years is how much more ubiquitous private aviation is. Whether it's from inherited wealth, where people are just used to flying privately, or you're now creating an AI company or whatever the case may be, and your first thing is you think about, well, I'm going to buy an airplane. And that's now, because their friends are using it, they were chartering. So that's been it's certainly a big shift demographically is people, I'm 43, I regularly talk to our customers who are buying a large cabin airplane for the first time. That was almost unheard of, say, 15 or 20 years ago.
Stephane, you used to be a derivatives trader. So, when James is talking about things like interest rates, you'd see the markets move in milliseconds. With aircraft finance, how closely do you think things like interest rates and FX impact a customer who's decided to buy a jet?
So I think you need to look at it two ways, and that's how the panel is divided. Like if you do a poor asset class financing, then obviously that's something very important. When we look in the private bank, we look at the overall balance sheet of the clients. So it actually is less relevant. It is relevant in the sense that obviously the client wants to know how much they pay and what sort of sensitivity they will have. But it's not as relevant as a pure looking at discounted cash flow and how you're gonna value the jet, and just looking at the jet as your source of repayment if there is a problem. Most of our clients, actually, back to the presentation, is in the region are wealth that comes from a lot of different new technologies and new sectors, and they're also very aware of what's happening in the market, and they also invest in many different assets. So Melissa mentioned like art, yachts, jets. So we take all of this into account if a client wants to get financing on their jet. So it's not as relevant as for us as it could be for a portfolio that you look at, as you say, like you want to know exactly at every single moment how it changes. So it's probably more relevant for when you look at asset-backed.
I will share another point of view. For our clients, actually, the interest rate is relevant, particularly and coming from a bank where not all of our clients are actually borrowing to finance. Sometimes they're actually borrowing to release liquidity from the asset, and therefore they are releasing liquidity in order to reinvest with a private bank. And for us, for them, therefore, the interest rate is quite important because Obviously, if the interest rate is lower, then they'll be able to generate more of a carry from the investments that we manage.
Singyew?
I tend to agree with Melissa. I think for us as well, we generally see the trend where interest rates are actually lower, then there will actually be a bit more demand for clients to actually release equity on their assets. That's when they can look for returns within the bank on other products that will be more than enough to cover the interest costs of actually monetizing, releasing equity on the aircraft or the yachts.
Mike?
A fellow banking colleague mentioned to me a year ago that he was a much better banker when rates were 3%, right? I've worked for a few different lenders, primarily in the US. One of them was primarily doing smaller cabin airplanes. It was pretty common that if they didn't have financing, they couldn't have acquired the airplane. It's very different for the kind of borrowers that I work with now. Melissa hit the point right on. They don't need, this isn't debt. They don't need the loan in order to buy the airplane. This is just leverage and balance sheet optimization. So yes, rates are important depending on what they're trying to achieve.
So just to clarify maybe what I meant, the level is important, but if it moves like intraday, or that doesn't really matter. But the direction of travel is important. Now that we see rates trending down, obviously the lower the rates, the easier it is to finance, just mechanically.
Chris, I see, don't take this the wrong way. I think the private bankers are tending to do large cabin aircraft. Their customers are tending to order it several years out. Your customers strike me as being much more in the market for a deal. You do probably more pre-owned than you do new, is that fair?
Yeah, that's definitely fair. And I think the difference between the customer base and the private debt world that I live in versus the other on this panels is that there's two sides to the story. So for the clients, we're just competing against their own money. So it's a matter of, whether our interest rates which are going to be, much higher than credit-based interest rates, can they invest that into their own company to get a higher rate? And then when you look at my investors, which is primarily, family offices, ultra high net worth individuals in the US, looking to put their money to work, private debt, when the interest rates go down, their mindset for return doesn't go down right away. It's risk return. It's because they have other areas where they could get that same risk return, whether it's in real estate or whatever. So it's a similar but different dynamic.
And Alex, your customers, you do quite a lot of corporates as well. And so presumably when they're talking to you, they're also looking at what they can get if they use proceeds from a corporate bond or from a general facility. So do interest rates impact your demand more?
Yeah, so interest rate, I would say interest rate, forex rate, all these create instability. People don't like uncertainties. So whenever there's a large fluctuation, people tend to make decision rather slowly. And then when there's more certainty, people tend to make decision quicker, let's say. I think at end of October, there's going to be another rate cut. So we're getting more inquiries. But then back to the question, is it more relevant to do leasing for a corporation? I think the answer is it depends. It depends on what kind of structure they want to do. It depends on whether they want the balance sheet optimization, whether they want a heavy asset that sits on their balance sheet, and then so they can calculate their asset turnover ratio better. So everything's more relevant. But I tend to agree that everyone or any corporation who wants to use a corporate jet, who wants to buy a corporate jet, they don't finance because they need financing, because they want to optimize their balance sheet. So that's why they do it. And then, but in Asia, I would say we tend to see more customer that's in a personal capacity or small and medium-sized capacity, whereby I think more of our North American-based portfolio are majority corporations. So that's what we're seeing.
And when we talk about de-dollarization, aircraft has always been a dollar market, and like yachting is largely euro. There are some countries in the world where buyers have tended to play use aircraft as a fun way of playing the FX market. I'm thinking of South Africa, Chris, where it's fair, isn't it? Where South African buyers have tended to take out dollar loans as a way of punting on the rand.
Yeah, I guess in hindsight, that would have been a pretty good strategy. So, yeah, I'm not, over the past like 12 months, I'm not necessarily seeing that in action, but I can see where you're coming from.
Okay. One of the things I think James touched on brilliantly was looking at foreign direct investment in countries like Indonesia, Vietnam, Thailand, Malaysia. Melissa, are you seeing that with your customer base?
Yeah, so we're definitely seeing growth in India and the countries, and the ASEAN countries, so that would be Indonesia, Singapore. We're also seeing flows from the Middle East as well, but that's not covered by James, but definitely that's another market that's growing for us.
Same for you. And do you have any issues with the jurisdiction?
Issues in terms of?
Some are harder than others, aren't they? Like, I think Laos, have they signed the Cape Town Convention? I don't know.
There are certain restrictions to which jurisdictions we can do, if you're referring to financing, and also the bankability of clients from those jurisdictions for onboarding into our wealth management platform as well.
Alex, are you seeing this exactly the same sort of economic trend with demand? Like, are you excited about particular markets?
Yeah, so we are seeing a lot of foreign direct investment as a result of partly the deglobalization, because nowadays with the U.S. trade tension, nobody wants to put their own manufacturing capability in one country. So we do see a lot of people who are mining corporations that's buying mine sites in Indonesia, in Africa. We are seeing manufacturing businesses where they are opening operations in Vietnam, in India, and elsewhere in the world. So, but then all these people, I would say, I run into people that buy jets because of this reason, but then this is not entirely the reason. Not because they open a company there, they want to buy jets. I think it's because when they open a company, they start seeing it making a profit. They think they can make better use of their time, so they buy jets. So we do see that particularly, that's a foreign direct investment in Indonesia probably doesn't generate direct buyers in Indonesia, but maybe direct buyers maybe in China, maybe in US. So that's how I would, that's how I see it, how it's relevant.
Mike?
It's interesting, like as more wealth is being created, a lot of these entrepreneurs are becoming multi-jurisdictional. So it's kind of a hard question to answer. They may live in Indonesia per se, but they have a company in China and the Middle East. So what are they? I mean, the plane maybe it lives in Indonesia, but it's registered in Malta. So we oftentimes see it's kind of pieced together. I mean, yeah, we're going to call them Indonesian because that's maybe where they live some of the time, but we're seeing a lot of globalization is probably the more driver rather than just looking at a specific country and having all of their assets and wealth held right there.
Stephane?
Yeah, similar to Mike, I think what we do mainly as well is initially is the KYC, right? If you're comfortable with the KYC, then the jurisdiction is obviously an element, but you'll try to find a way to do the financing in a way that you're comfortable even on the jurisdiction basis, but the KYC is key.
Chris?
Yeah, I think what I see for clients in this part of the world is their wealth is not really derived from one country, and I think it's kind of what you were saying. It's they're wealthy because they have investments all over this part of the world. Where I was talking to a client in Thailand, and 90% of his business was from India. He just didn't live there.
Okay, that's a really good point, but I'm going to ignore it. I want you each to, Alex, starting with you, which country in this region are you most excited about deal flow for the next 12 months? Ignoring the multi-jurisdictional point, which was a good one.
You know, actually, I think I couldn't say for sure, but then I'm seeing more activities coming from North Asia at the moment. I have a feeling that it's, you know, slowly coming back, and then whereas, you know, because we cover such a big region, sometimes we get a little bit up north, sometimes we get a little bit up down south. So it really depends. But I think obviously the ask for tariff the ask of U.S. of tariff from each country is not really a fair play to all the people who's big in manufacturing. But then, you know, all these people, all these entrepreneurs are smart people, so they're gonna find a way to navigate. But then back to your question, where am I most excited about? I would say I'm more excited about seeing more activities in Northern Asia, particularly in Greater China, and then also actually I'm seeing some deal flows in Australia and New Zealand. So that's also a very good. I mean, historically, Australia and New Zealand has been strong in aviation, but then we're seeing, I think, more opportunities down south as well. So,
Singyew?
I'll keep it brief. Greater China.
Mike?
I'd say Greater China, but actually, it's my first time in Singapore, so I'm learning a lot about this. But talking to some of our banker colleagues, seeing some of the wealth moving from other jurisdictions here, I'm also looking at infrastructure to support these airplanes. There's 2 OEM service centers here in Singapore. That's really important, so I'm going to say Singapore.
I would say Indonesia.
I would say Greater China, we see much interest coming back strongly, and Australia is also a market that we're starting to be quite involved with.
2 markets, Singapore, but we do see close inquiries from India. The issue that we've been having is really more on the registries.
Hong Kong's death has been over-exaggerated. Would you agree?
I mean, they've announced they're building new hangars there, so clearly they're interested in developing the infrastructure, certainly needed. I mean, am I excited about Hong Kong? Is a lot of demand there? Yes, but is it something? I was thinking along something new, but certainly Hong Kong would be. Am I excited about it? Yes, but it's not something that's new.
Okay, we've got audience questions. Let's talk rates. Floating and fixed.
Floating.
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 Floating with a surprising amount of fixed rate requests, which I can't quite quantify, but some people think that there's an opportunity there.
But you'll do fixed rate?
Yeah.
Generally floating.
yeah, we do both, and then I would see half and half. You know, we do get some floating requests and fixed. You know, the past couple months being fixed, but then we are now seeing more requests that's asking for floating kind of quotation.
Yeah, we'll do fixed on more of a bridge financing, but our floating rates have floors too.
If you do fixed, do you have expensive break costs?
I think it depends on what year they break.
Do you have a break cost? Yeah.
Of course.
Yeah.
There's going to be a break cost.
Okay. How important, another audience question, how important is it for a finance company that the aircraft owner keeps the asset enrolled on programs from OEMs, engine and airframe?
It certainly helps create a more compelling financing offer. We strongly prefer one, but we don't necessarily require one in all the deals, but it's become a pretty compelling reason why we should consider the deal not having one.
Melissa?
We prefer with programs. It improves the valuation of the aircraft, but we're flexible.
Singyew, same?
We prefer it, yeah.
How often do you get an owner coming to you not looking at doing a program?
I don't think I've ever been approached
Yeah, it's
by one without.
We require engine programs, 100% engine programs. Airframes will we can do without them, we like them, but lending program has to be in force and valid, otherwise it's a default, because it's a key, and our only recourse is the asset itself, so that increases the value.
Got a great question. No one talks about Vietnam. Any reason?
Oh, we love Vietnam. Vietnam is all we talk about. So no reason for me not to talk about it, but then I defer to other guests.
Anyone else love Vietnam? No, it's just Alex.
I love Vietnam. So if you have any Vietnamese requests, send it over.
You can also do export credit to Vietnam, which is a session we've got tomorrow. Okay, James told us at the start of his presentation that he couldn't predict the lottery numbers. You guys are being asked to talk about where will rates be, interest rates be in 2026? Under 5%. Who wants to jump in on that one? Chris, you're not part of a big bank, so you can jump in on that one.
I think rates are slow. They're going to slowly just go down and so the next 3 quarters, 50 bips.
Alex?
I would agree with what Chris is saying. Next 3 quarters, probably 50 points. I think probably by the end of this year, another quarter is going to drop. So I think.
Yeah, and also say, I think it's already kind of baked in. I think not everyone's predicting that, but I think that's just the most likely scenario that people are subscribing to.
Yeah, and then they need another reason to pump the stock market as well. So
yeah,
I think that's likely to happen.
And everyone else is telling you to refer to their bank research department.
3 cuts within 12 months.
Sorry?
3 cuts within 12 months.
Okay. We can check. Next year we'll replay the session for all of you. Alex, you obviously have been pushing operating leasing for the last 10 years, Global Jet Capital. Are you seeing, what's the uptake in Asia versus the US?
I would say, more people are aware with operating lease. We try to push it a lot, and we are the only company, I would say, offer it at a global kind of scale. And I wouldn't say everyone would sign up for it, but a lot more people that I talk to are seriously consider the benefit of operating lease. Just because, sometimes they don't want residual risk, sometimes they want additional privacy, sometimes they want to, expense the rentals, through the corporations. So that's something they would consider. But then again, I think a corporate buyer and a personal buyer would consider very different things. So, but my 2 cents is, people are seriously considered as a valuable option against, traditional loans. So that's, I think that's, very positive for us.
I think it depends on the usage of the plane. I think if the plane is going to be used very frequently, a lot of hours, then it probably makes sense to own versus lease. So it really depends on the, the factors that Alex mentioned plus the utilization.
I think in the ultra-high net worth space in the past 10, 15 years, it just hasn't been that prevalent. It comes up, I hear about it here and there. I have enough reasons not to sleep at night, so I don't feel like having to take residual risk in our bank, so we're not being asked about it that much, but we're happy with where we are.
Singyew, are you seeing any interest in Islamic leasing in the region?
Not in my region. No.
Anyone else? No. Okay. Any questions from the audience? The final question. You guys followed on from a great forecast. Alex, Melissa, starting with you, we'll go that way. What's your forecast for the next 12 months for Asian business jet finance?
I think I was just talking to a few people at the back. I don't think we see, when it comes to jet market, you don't see these huge, it's not a volatile market. I think it's slow but steady. So I think we'll continue on that slow but steady trend.
Similar. To answer this question, I'm looking at my pipeline and I see requests coming in more frequently. And as we see the wealth growing in this region, don't forget the distances are bigger in this region, right? People that want to travel in this region need to do longer distances, so they're more likely to like buying a jet if they have the wealth for it. So steady growth.
Yeah, I like the slow but steady. I think that's realistic.
Slow but steady, I think increasing amount of debt taking on, because if rates go down, then it makes the economic compulsion to do it greater. So I'm thinking more lending as well.
Slow and steady as well. We're seeing more queries this time compared to 12 months ago. So hopefully momentum increases from here.
I think I want to say slow and steady, but then, that would be not original. So I think better than this year. This year is a little quiet because, there's a lot of uncertainty, especially the past 6 weeks. I mean, not 6 weeks, 6 months. But then we are seeing inbound of inquiries just the past couple of weeks. So that doesn't necessarily translate to all the deals that we can do. But then at least people are asking the right questions, asking us to quote is the right question. So I'm positive about the market. And I think next year it's going to be better than this year.
You probably, out of everyone on this panel, have the most ambitious growth targets, though, don't you? So you probably can't go slow and steady to Vivek.
I guess.
Brilliant. Thank you so much. There was a great panel. We've also got a great financier, Eldridge Capital, which is Don has not been on this panel because he's been out cooking lunch for you outside. So now lunch hosted by Eldridge Capital Management, and we'll be back with Ev from Bombardier at 2:35, looking at luxury trends transforming the industry. Thank you.